Hello, friends, and welcome to the Optimized Advisor Podcast, where we focus on optimizing the well-being and best practices of insurance and financial professionals today. On this show, our objective is to help you optimize your life, optimize your profession, and learn from other optimized advisors. I'm your host, Scott Heinila. We hope you enjoy the show. Okay, on to the topic at hand. Significantly more exciting and riveting, and that is the topic of long-term care. Gentlemen, welcome to the Optimized Advisor Podcast. Thank you for taking time sincerely out of your busy schedules. I'll do a quick introduction by name. Both of you good friends of mine, Brian Ott, 525 Advisors, and Brad Shepard, One America. Why don't you go ahead, both just talk a little bit about yourselves and introduce yourselves, please, to the audience.
I'll start. 525 Advisors. We're based out of Seattle. We are a basically an insurance broker that focuses on long-term care planning. Our real focus is on asset base, but we do a handful of traditional, and then we have some ancillary business with life and disability as well.
Brad?
Yeah, so Brad Shepard, my current role is regional sales director with an insurance company called One America based out of Indianapolis. And just a little bit of history. So I broke the mold, I think, of the traditional long-term care specialist right out of college, 9 months after being out of college, after actually ruining many neckties at Enterprise Rent-A-Car, trying to clean cars to re-rent them. I decided, that's not cool. That's not for me. And I'm no joke, literally answered a blind ad in the newspaper. Scott, do you remember what those are? They're like big pieces of paper printed, with a lot of words on them.
My pappy has some on the wall.
Yeah. Well, so no, in all seriousness, it was a blind ad, and it just said unlimited income potential. Now imagine that. Okay, what is that, right? All I knew is I didn't want to ruin any more neckties.
Right.
And so, long story short, it was an advertisement, a recruiting advertisement for insurance and all fixed insurance products. And one of them was this thing called long-term care, which, you know how it is. It's nursing home stuff, right? I mean, that's
Right.
the way I learned about it was, it's all about nursing home. And that's when I was age 23. And so now age 48, so 25 years in the business. I spent 6 years doing nothing but selling long-term care, just like Brian, working with clients and advisors, my spheres of influence here in the central Pennsylvania area. And then in 2004, was tapped on the shoulder by one of the insurance companies that was expanding their roles into essentially wholesaling, right, which is training and marketing with customer sets. And spent 12 years at a leading long-term care company. It was GE Genworth, and then in 2016 came to One America. And so a lot of nights in hotels, and working with agents and advisors. But I wouldn't change a thing, both personally and professionally.
And never looked back.
Never, and never will. This is my lane. I'm staying in it.
And not to speak for you, Brian, but certainly doing a hell of a job in the same space as a pioneer, forging for those in long-term care.
Yeah.
Which Brad, you are the reason that we met Brian, and this relationship has its opportunity to grow and develop. So again, thank you both for your time. Our podcast focuses on the financial advisor, insurance professional, and this today is in two specific areas. One, on the topic of obviously long-term care planning. November is Long-Term Care Awareness Month. We'd like to kick it off with some stats and figures that I hope Brad or both of you can share, and just to start the conversation. But two, sharing our focus and emphasis is also to share to the audience who we would identify as optimized advisors. And I would definitely emphasize that both of you fit that mold. I mean, Brad, you are definitely a force to be reckoned with in this space from an insurance company, i.e. manufacturer perspective. And without any question, Brian and your firm do a tremendous job in telling that and providing long-term care insurance planning. So Long-Term Care Awareness Month. What are some facts and figures that we can impress upon our audience about the importance of this, the critical aspect of this, and that every person needs to have a long-term care insurance plan? I'd like to also add that a plan does not always mean that you have to own insurance. Long-term care insurance, having a plan, means just that. You got to have some type of a plan in place. Now, make no mistake, we do feel that for those that qualify and certainly have the capacity to do so, leverage and tax-efficient leverage is significantly greater than not having any leverage at all. But maybe we can unpack that in a moment.
Yeah.
Truth be told, we just came off of a webinar, Brad, that you did a tremendous job with, and you had some incredible slides and very critical information. So if you can kind of just rehash a little bit of that, and we'll go from there.
Yeah, so I'll just start out quickly, and then I'll let Brian. We'll probably ping pong back and forth with some things, from both sides. But one of the What America, we just collaborated with a big research company called Heinila Research and just launched a consumer survey. It's a consumer market survey, basically 1,000 consumers age 40 plus that have no ties to the financial services industry, and we wanted to understand what they were thinking, like consumers. So for those of you that may be listening to this, if you're in the financial services world, you may say, well, gosh, what do my clients think about this subject matter of long-term care? Now, I joked a few minutes back in my intro, right, when I said that, that nursing home stuff, Scott.
Mm-hmm.
Well, if you were to ask clients when they hear the words long-term care, and I'm sure Brian will be, shaking his head here, 99% of the time in their mind, long-term care equals nursing home care. And it's one of our biggest challenges, but also it's one of our biggest opportunities.
Mm-hmm.
The first statistic, if you want to throw out, something in that survey that we found, which was eye-opening, was only 18% of consumers have worked with a financial professional on long-term care planning. That just blows my mind. Now, these 18% of age 40 plus, 1,000 people, it just blows my mind. And so we could certainly take that conversation in so many directions, but I'll kind of pass it over to Brian and I'll say, why do you think that is, Brian?
Yeah, I think twofold. Number one, let's go back to that nursing home statistic. I think it's a hangover effect, because you got to remember when long-term care insurance came out, it was really called nursing home insurance.
Mm-hmm.
So, like, my great-grandmother went from her house in her late 80s down to the local nursing home for the last 6 months of her life. And it was expensive back then. So we have this hangover effect, and we're trying to educate. And if you read, like I was reading an Ohio State publication, they're trying to educate people on the importance of long-term care. And they were talking about it in the context of nursing homes. If you have to go to a nursing home, this is how much it costs. So I think that's one of the hangover effects, why people still think nursing home. Secondly, why people aren't talking about it, financial advisors. I'm a firm believer that a financial advisor, if they have a client sitting across the desk and they start talking about the importance of long-term care, and then the client's going to say, well, what do you have? What are you using? That's a tough situation that a lot of these financial advisors get themselves in. And I think they're so used to just looking at it as a money issue. You got enough money, you're fine. And as Brad and I, we were just talking about this week, there's so much more than money. If you take money out of it, long-term care is still a big issue. So I think that's where the consumer needs to be educated, and people aren't talking about this because a lot of the financial advisors, a lot of the attorneys, a lot of the CPAs don't understand what long-term care is either. So they're not really educating their clients because they can't.
Yeah, that's a great point. I mean, you think about just financial advisors, what is their, most cases, right? Their primary objective is I deal with wealth accumulation and or income distribution, equities, fixed income, maybe some insurance solutions in terms of the portfolio. But I'm not really talking about all of these ancillary consequences, these unintended consequences, the real life dynamics that individuals and families deal with as these medical issues and impairments arise. You cannot diminish the reality and the severity of that when it becomes in their forefront. And so You know, it's interesting you make the comment of it used to be nursing home insurance. I mean, the original, correct me if I'm wrong, many of the original long-term care insurance plans did not cover any form of home care in any level.
Yeah.
It wasn't not part of the plan.
Well, yeah, and they were defined as facility only policies. And if you read the definitions of that facility was something that had 24/7 skilled nursing available. So a lot of the people that bought those early policies, then all of a sudden we'd start having adult family homes, assisted living facilities. Those weren't technically a facility by some of the original definitions. And so that is, again, the way we started long-term care. But that was really what it was designed for. So now it's evolved to what we call these comprehensive plans, which cover care. You know, most people start in their home. You know, that's the truth. Most people start in their own home. That could be your kid's home. But the idea of long-term care planning now is to have a plan to help you stay in control of your care options and then move through the system if it ends up being assisted living or adult family or special memory clinic.
Yeah, and in fact, it was mind-blowing to me when I went from actually helping clients across the kitchen and boardroom table to kind of that peek behind the curtain at the carrier level. Yeah. And seeing some of the actual statistics, you know, just on paper, whether it's dollars out the door or claims actually paid, that 3 out of every 4 claims that are paid initially are exactly where people want to be, meaning we're fulfilling their hopes, wishes, and dreams to stay at home as long as possible. So if we talk about opportunities where financial professionals can really play to what clients want and fulfill what they want in their hopes, wishes, and dreams for their plan of care, that's what we need to be talking about more than anything. One small little point on the nursing home only insurance. I remember the days back in the late 90s, early 2000s, when, yeah, it was literally, it said nursing home only. I would sell, let's say last year, and the next year, the insurance company came out with an addendum. So they didn't have to, you know, buy any more insurance or anything, no insurability, no underwriting, where they started to add assisted living benefits to the nursing home only policy. So we really have evolved as an industry in a great way to play to what clients actually want, which is to keep them at home as long as possible. We just need to talk about it.
Yeah. So we talked a little bit about the 18%, and then I mentioned one of the elements of these unintended consequences. Can we pivot to talking about what I feel many people just overlook is the effects of the caregivers themselves? Brad, you have some statistics, and then I know, Brian, you can speak firsthand to dealing with this. And to me, this is the probably one of the largest elements of having a plan in place because of the effects that this has on the people I care about most, my wife, my adult children, or a husband, if you know, spouse, if you will.
Yeah, well, you know what? I'm gonna buck the system for a second and actually stay away from just numbers and statistics, because I can tell you firsthand, and going through it right now with my mom, 100% of the family is involved in that loved one's care. Mm-hmm. And so, you know, directly or indirectly, and, you know, back at another carrier I was at before here at One America, they actually did a survey and it talked about, you know, caregivers and the loss of income that they had because either they weren't productive at work, they couldn't show up at work. That is just the financial side. Talk about the emotional side of this, the stress that it adds to every layer of that family infrastructure. You know, it's kind of like the untold part of why we do this. Mm-hmm. Now, there are benefits within insurance contracts that can help with it, but I never lean on that as the cure-all, the end-all, the be-all. You know, caregiving, especially for our loved ones, is something that you can never forecast. You know, you don't know what exactly it's going to look like, you know, an hour to hour, let alone day to day, based on the type of care, the level of care, the setting. And it's just one thing that we need to talk about so much more, because as Brian said, and I'll pass it over to him in just a second, you know, this isn't about the money. The money will be there. I mean, think about that for just a moment. The money will be there regardless. Now, whether it it happens to show up because of an insurance contract, that's wonderful. Or it happens to show up because we're diving into assets to generate the income to write the checks. And you may be surprised by this statement, but one of the best benefits that we have as Americans is that if the worst case scenario happens, what we fall back to is Medicaid. And that program is designed very specifically for people that are impoverished. And we're not going to be laying on the street needing to have care. And so the money is going to be there, but it's how that care is administered and by whom. So Brian, you want to elaborate on that from a family perspective?
Oh yeah. So I will just tell you from personal experience, when my grandmother went through long-term care, she exhausted her policy. And my mom said that was the worst part. It was, she said the money was okay. She wasn't going to go broke, but not having that resource. And I think a lot of people don't understand that having a long-term care plan, as Brad touched on, it's not necessarily just the money.
Mm-hmm.
Who am I going to call? Who's on the other end of that phone? And I don't care if you've wrecked a car or like you had a house burned down like I did when I was a kid. The insurance company didn't just show up with a sack full of money and drop it on your porch and say, thanks for being a client. And a lot of people think of long-term care, it's just that, oh, I have enough money, why worry about it? And we had a very touching case. It was in March of 2020, right at the epicenter of COVID. And Peter and Lois, and they were clients of yours, Brad. And Peter got sick. They took him to the hospital on Friday. He passed away on Sunday. Lois was in the middle of kidney cancer. He was taking care of her. I mean, they were in their 80s. What was touching about this is that nobody could go in and see Lois because she was exposed. The daughters were calling us. Nobody knew what to do. We called the insurance company. We got a claim specialist on the phone. They got a hold of the Cancer Alliance. They got somebody to come out and assess. And they put the balls in motion. And they knew the questions to ask that we didn't know what to do. And I remember the daughters calling us and just saying, I can't believe you guys did this for us. I said, your parents did this for you. This was their gift to you because they did the planning. They did the planning ahead of time. And what we see with people, if you study after study in long-term care situations, and you touched on this, Brad, earlier in your webinar, they don't bring families together. In a lot of cases, they tear families apart. And we have to understand that when we're talking about long-term care, okay, take money out of the equation. Who's going to handle the call? Who's going to handle mom's 14 calls today? Who's going to help dad with mom? All those things that you go through. And do you know how to answer those questions? And so those are the things that I think we just have to bring awareness to, especially now that the holidays and stuff is like, how's your situation going to affect the people sitting across the table? And I think a lot of people aren't thinking about that.
Yeah. I think about the ones holding the purse string, right? Which are most commonly the financial advisor. And there's this dynamic of struggle, of facing this. I mean, it's almost like this broad stroke of asking the question, are you concerned about long-term care? Yes. Do you have a plan? Yes or no? Okay, I've covered my bases. Move on. I think an element of that is changing. We can only benefit as an industry by having more advisors embrace this and really, really holistically take this seriously and implement this. But why do advisors struggle, do you think, with really, really approaching clients at an effective, efficient level with long-term care planning? What are the reasons?
I'll let Brian take this first since I took the last couple, but I'll bring it home after.
And be on it, please. I mean, the point of this is to be direct and honest because we're doing this with positive intentions.
Yeah. I going back to what we just talked about, I think that advisors really struggle with this because number one, they don't understand it. They don't see the need for it. And a lot of financial advisors believe that their number one job is to grow the money. And I even had one guy just tell me, my job is to make sure that my clients have enough money that they don't need long-term care insurance. Mm-hmm. That was his take on it. So again, I think that's part, that's like Brad would say, that's room for us to grow, to educate those financial advisors too on really what long-term care insurance is.
Right. And
we'll see a lot of people, like I just had one last week. The lady was going to put a couple $100,000 into a long-term care plan. Her financial advisor said, well, that seems like a lot of money. Maybe you should just do 100,000. He was just looking at that number going in, not what the benefit was, not who was going to help her. He didn't ask me one question about what the benefits were or what the plan did. So again, to me, it's the financial advisors looking at it through the lens of money only, and they're thinking, well, if they're going to take that extra $100,000 out, maybe, you know, I can grow that at X percent. And so there's just so much need for education at that level of what these plans actually do and how they work and the protection that they give, not only the assets, but the family. And that's a key issue there.
Yeah, the image that comes to mind there, if you guys, I don't remember which credit card company, it was a credit card company commercial, and they show an image of something and there's a definitive finite price to it, you know, a car, and then a child's toy, and you could put an actual price tag to the items, and then it showed something that was quote unquote priceless.
Yep.
And that's what this really is. I mean, to your point, whether it's 1, 200,000, 50,000, it's what that client associates the risk to and what their element or what they feel is an adequate amount that they should be repositioning to help eliminate that risk.
Yeah.
And so many of the items do not have anything to do with the dollar sign to add to that point, have to do with the emotional impact, the effects, and all the other things, which is a much longer list than just the dollar sign. Yeah.
Well, and the part that I'll add to that is you guys set the ball perfectly on the tee. I like these questions, Scott. Keep them coming, right? They're easy ones. But seriously, confidence and competence. Confidence and competence. And I'm talking about the 6 inches between the ears at that wealth manager, that advisor level. And so if they don't feel that they have the confidence in the subject matter, right? And let's face the facts. Consumers, I mean, gosh, we live in a world of, I want to go buy a bar of soap. I'm looking at reviews, aren't I? Right? Mm-hmm. I mean, consumers are Googling long-term care, and if they feel they have enough time and they want to sit there and read, I mean, they can educate themselves all they want about the subject matter of long-term care. Now, that doesn't mean that it's always accurate information, but many times I see financial advisors, they want to stay in their particular lane, which Brian mentioned it, you know, growing the money and accumulating. And if there's anything, and I mean anything, that's going to derail the relationship around that money, they're not going to go there, right? Mm-hmm. Mm-hmm. And so I would say that the opportunity that we have in our industry is for those advisors out there that say, yep, that's me, right? I just don't feel I have that confidence and competence in the subject matter. Then don't overlook it, but team up. Go out and seek, like the Brian Otts of the world, go out and seek the people that specialize in this, that can help them with this subject matter. And a lot of that comes down to relationships and your social, you know, your own little market that you work in, or even nationwide with obviously virtual meetings. You can work with professionals that are long-term care specialists and still provide the greatest benefit to those clients without having to know every detail of what the policies have within them. And more importantly, what's going on with different programs, Medicare, Medicaid, and beyond.
Yeah, that's a great point. I mean, with many advisors operating at the highest level of their game, I'm a quarterback, if nothing else, for my clients. And the legal guardrails require that I align myself with a CPA if I want to engage in that capacity for my clients, and an estate planning attorney. But why should it end there? It shouldn't. Exactly. I definitely should have an insurance planning professional or an advocate that's part of my team, that's an extension of my practice, that picks up where I've got gaps. What's wrong with that?
Yeah. The problem, I just don't think that people play well together. A lot of advisors, and I say a lot, it's like most, and you'll see these guys.
Didn't we learn anything as kids with the sandbox? Come on.
I'm going to take my toys and I'm going to go to my own box, right? It's like, so I have a few that really will just carve out that insurance component and give me a call, a couple of them. But a lot of times I think advisors need to learn not to feel threatened. And I've had several clients leave their financial advisors because they went in saying, I want to do this asset-based long-term care plan. It makes sense to me. I watched my parents go through this, Their advisors telling them it's not a good idea. Mm-hmm. And so I think that's that balancing act. Why is this important to you? Why doesn't this make sense? And especially when we look at the statistics on how fast financial advisors are getting replaced with index funds and target funds and all these things now, that a lot of people are starting, like Brad said, doing the Google, starting to seek out that information. Well, financial advisors need to be able to support that and be able to, add to that conversation by saying, hey, well, I don't know this, but I know somebody that does know this, and let me introduce you to them. And I think that would really help everybody, because our goal is not to take money out of assets under management. It's really to protect those assets under management and help work together, right? So if something happens, like my 62-year-old client that just got diagnosed with ALS, she got a policy when she was 59. Thank goodness, right? Because what if not? If she didn't have that, what happens to her assets? She can't work anymore. She can't do anything. So that's really what we're trying to do. And we need to balance that with these advisors saying, look, it's part of the puzzle, and you guys need to be aware of it and be willing to talk to your clients about it.
Yeah. And just avoid family turmoil.
Yeah.
Agreed. And, sometimes, that old saying, tough love, right? Well, sometimes we give a little tough love to the advisors out there and also speak their language, right? Now, advisors are working really hard with their clients, trying to navigate all the waters of volatility and market changes and the global economy, trying to figure it all out for their clients. And instead of realizing how this can be something that can benefit them, they just push it aside. And so the way that I speak directly to them, the tough love is, why are you doing this? Like, why are you getting up every single day, working with the clients you choose to work with? Are you doing it, just because you love it? Or are you doing it? You're in business too, right? And so one day, generally speaking, not every advisor, but one day, most advisors, they either sell off their book of business or it goes to a junior advisor, another teammate. And just imagine, Mr. and Mrs. Advisor, this is really, think of it like AUM, or assets under management, or portfolio insurance for you too. Imagine how much more profitable your book of business will be, knowing that X percentage of it, depending on what numbers you look at, is just going to walk out the door to pay for extended health care. Yeah. And the other factor of that is, Mr. or Mrs. Advisor, don't you truly want to work with multiple generations, right? So the children, don't you want to work with them? What better way to show value as being their advisor and providing sound advice and have a great relationship than when they need it most, when they're in their worst time of their life, including the children, when mom and dad are sick, than to be there for them as it relates to having a plan in place. And it could be insurance, it may be not insurance, but most of the time it's going to be an option of reallocation into some type of insurance contract.
Right. So moving on to two more points that I want to touch on. In the webinar you graciously just hosted, Brad, there was a slide that really struck a chord with me that I'd love to just talk through. And I'll start with you, Brian, with this: the 3 most common barriers to purchasing long-term care insurance. And some of this we've touched around a little bit, but if we could just kind of succinctly talk through these common barriers to purchasing long-term care insurance. And the first one, not that it's the easiest, but I'm going to give you a layup, Brian. That's the cost of long-term care insurance.
Yeah.
Sticker shock, the price. Is it too expensive? Can I afford it? I can't, right?
Yeah. I tell you, I really struggle with this one, because compared to what are we comparing that to, right? It's like, I can't afford a traditional plan of $5,000 a year. Well, how are you going to afford $7,000 a month for the next 5 years then? So we're trying to balance that out. And I think that, again, the back question with the financial advisors, I think a lot of people and a lot of advisors still look at insurance as we're giving something up. And that's where these new asset-based plans are just making waves. And people call me every day because we talk about them. It's like, I didn't even know these existed. Wow, this is great. So you mean I can get my money back? Well, you can get your money back. In a lot of cases, you'll get more money back than you put into the plan. So the idea of being too expensive, I don't get that. And that is, the number one thing people search when they Google long-term care is, what's the cost of long-term care? And then when you go to long-term care insurance and someone says, I want a quote, I don't care if that quote is for $500 a year or $500,000 single deposit, it's too expensive. So we have to balance that out compared to what. And I think that those statistics that Brad had this morning on the webinar it's just eye opening. And that's again, we look at it half empty, half full. I think it just means there's a lot of room for education out there, especially about these new products that are available.
Yeah, certainly number one. I mean, to me, that's a quick, just being in the space, it's a quick confirmation, a lack of planning.
Yeah.
It's the request for a quote, and here's an illustration. Illustrations presented to client, and there was no forecasting, pre-planning, conversations, asking those discovery questions, and really doing not just field underwriting from a medical perspective, but underwriting from a real life situation.
Yeah.
I would just add very quickly, and I won't take up a lot of time on this, Scott, but I would add that we have to just change how people think about the word insurance, right? Because the word insurance has this connotation of an expense line item, right, within their portfolio. And so what I'd like to say is, instead of it being almost considered as a subtraction to the portfolio, we just need to help people understand it's an addition to the portfolio. It's an addition to the portfolio. And then you can even kind of make it even simpler, which is, Mr. and Mrs. Jones, would you rather pay $1 out of your own pocket for $1 of care? Well, what if we could turn your dollar into, let's say, $7, or maybe even unlimited dollars? We just have to talk simpler to clients instead of it being sticker shock. And within 5 minutes of talking to a client, the first thing that pops out on the table is what? The illustration. That'd be like me going to buy a car, and I walk out of my rust bucket, right? And I slam the door, and within 2 seconds, I have the car salesman come up to me, right? No stereotypes, just it happens. Hey, how you doing? Come with me. We walk around the back of the building, and there's this shiny red Corvette. And he says, there it is. Great. Let's go in and do the paperwork.
Right.
You haven't asked me a question yet. You haven't helped understand what my true needs are. I mean, this does not have to be complicated, but it all comes down to price. And that's where people say the number one barrier is the cost of the insurance.
Right.
So go back real quick on that. Think of how long-term care insurance used to be sold. It used to be spreadsheeted, right? You want $5,000 a month for 3 years, and you'd put up 6 carriers, and you'd say, I'll take that one. It's the lowest. And so what's the connotation of that? This is a boat payment without the boat. That's what people think of long-term care insurance as, right? It's just a constant payment. So that's where we just have to educate and say, look, those options are still out there, and they make sense for a lot of people. But for people that are self-insuring, there's a better way to self-insure, because we can take something out of one pocket, put a bunch of features on it, stick it right back in your other pocket. It's still yours. And I think that's that gap when people say it's too expensive. It's like, I can show you how technically it's free. So lots of, and again, that's just this isn't a fun subject to talk about. So you just realize you got to keep repeating. But I understand where that too expensive comes from, because people think I'm making a payment for something that I'm never going to use. And that's painful.
Yeah. To close on that real quick, and then we'll get to you made the quick comment. It's not fun to talk about. Yeah, that's right. It may not be fun to talk about, but for many people, nor is eating healthy and doing what I know is right from a nutritional standpoint. I know I've got to eat spinach and broccoli, and you know what? I know if I want to maintain a healthy lifestyle, I've got to get up in the morning and get my fitness program going and get my blood. Those are things I have to do.
Yeah.
Okay. Number 2. What do we mean by this? Medical support associated with long-term care.
Yeah, so that was and I even commented on the webinar. It's kind of a vague topic of medical support associated with long-term care. The way that I would further define that is, well, wait, remember how I said earlier that we actually can keep people where they want to be? I don't think people understand the different levels of care. And so we need to educate them on what that means, because if in their mind, the stereotype for most people is long-term care = nursing home, they're out. I mean, if I do an in-person meeting, I always I try to be funny, but I fall on my face half the time, which is, do the Heisman, right? So you do the Heisman, and they're just out, right? They're like, nope, sorry, wall defense is up, I'm out. I don't care what you say next. Great advisor. I don't care, I'm out. So the education, in my opinion, that's one of the biggest barriers, is helping them understand what type of care they can receive and make their hopes, wishes, and dreams come true.
Yeah,
absolutely.
Good point.
All right. And number 3, Brian, not believing that they'll need it, which we've been talking around. But if you can just wrap that up with a nice bow.
Yeah, and I talk about this all the time, right? Just because your parents' house didn't burn down doesn't mean your house couldn't burn down. And same thing with long-term care. A lot of people, statistically, if you look at the research, most people don't believe they're going to use it. They believe most other people are going to use it, but they won't believe it. And that's natural. It's the same issue. We could replace long-term care with life insurance. A lot of people, well, I'm not going to die, right? It's like the other guy's going to die, but I'm not going to die. So I think we just have to get back in. And I say statistically, they'll throw out that number, 70% of us are going to need long-term care. Well, all that's really saying is that the odds are stacked against us. And if we're going to move into a retirement community at age 65 and you're signing the paperwork and you just bought this nice little house and paid cash and it's on the golf course and they say, oh, by the way, 7 out of 10 homes in this community catch on fire. Do you want insurance? Do you want to mitigate that risk? Most people would say, well, heck yeah. And some are small kitchen fires. Some are going to burn all the way down. And so I think with long-term care, we're going back to that. Okay, that's great. But look, there's new options now that if you get lucky, and I hope you do, I hope none of my clients use our long-term care. But what I know is, guess what? Their family's still going to benefit from that policy because that money is going to go back to that family. And if they do need it, which statistically it says they probably will, guess what? Now their other assets are protected so that their family's going to benefit. And so that's just the awareness where I don't think I'm going to need it. I hope you never do, but just in case, here you go. And I think that's something that we can just really start opening people's eyes with, saying, hey, yeah, you're probably right. But if you do need it, statistically, it says odds are stacked against you. But guess what? You can still protect yourself and get it back.
Scott, I promise 10 seconds. When I do in-person trainings, like 30, 50, 100 people in the room, I'll ask a basic question. Hey, look at this statistic. Now, I don't agree with it. It says that 70% of people age 65 and above will spend some time in a nursing home, meaning 70% of people will need care. And I say, okay, so raise your hands. How many of you, 70% of you in this room, raise your hands. Guess how many hands raised?
Like 2.
None, right? So advisors that I'm training are no different than consumers. The last thing that they ever want to think about is actually needing care.
Yeah.
Yeah, and I think it's also important to also respect and understand the differences between the psychology of a male and a female, and that definitely plays into that item number 3 as well.
Yeah. Oh yeah, we're going to die with our boots on, and I'll go out in the backyard, I'll take my gun or whatever it is. That's always the man story. And so a lot of times, especially with couples, a lot of times that's the driving force. Is like, okay, maybe you probably won't need it, but if you do, can your bride really lift you and transfer you and take care of you 24/7, 365? I mean, how many days do you want her to sign up for that? And so again, but by the way, you probably aren't going to need that, but in case you do, this is going to do this and this and this. And it's that conversation. It really is. Because as soon as you tell somebody like, oh yeah, you're definitely going to need it, that's just going to close them down. And so I like to agree with my clients. Say, yeah, you're probably right, but just in case, guess what?
A funny little thing that I'll do in a training or a meeting is I'll say, yeah, all of us guys, we're the hunters, we're the gatherers, right? I mean, we're just strong as ox until we have the common cold. Then we can't even get out of bed, and everybody gets a chuckle. And it's so true, right? Until we get the common cold. Honey, can you pass the tissues, please?
Yeah.
I don't have the strength.
Nobody gets more sick than me.
Yeah.
Right? Like, that's the mindset. Yeah.
Yeah. Absolutely.
Oh, well, gentlemen, I could go on for much, much longer. But I am obliged to hold to a schedule, and we are sadly out of time. Until next time, I do appreciate you both tuning in. Hopefully our audience can gain some insights to being more equipped and optimize their planning for long-term care. Till next time.
Awesome. Thank you.
Thank you.
Cheers.
Bye-bye.
Thank you for tuning in to today's episode. Please subscribe, like, share, leave a comment or review. Be sure to check us out on social media at Optimized Advisor Podcast. Till next time.